In this video, traders, we're going to look at the psychological pressure to always be trading. Stay tuned. Hey guys, warm welcome to you. Thanks for tuning in. Okay, so you've all been there, I've been there, the psychological pressure to trade. You're sitting in front of your screens, you've got your screens there, maybe you've got a couple of screens, maybe you've got 4, maybe you used to have 12 like I used to have, and I haven't got 12 anymore. You've got screens, whatever. You're sitting there and you're going, you know what, twiddling your thumbs, I need to make a trade, I need to make a trade, I need to make a trade. Not only if you're a day trader, but also if you're a swing trader. Why do we think this? Why is our brain thinking we must make a trade, instead of where we actually need to be and where such a more calmer place to trade from is, I'm just waiting for my setup. I'm just waiting for my setup. That's the difference. And when we can transition from that to that, massive change starts happening in our trading. All right, so let's look at some of the reasons why, and let's see if we can delve into perhaps dealing with those so we can overcome this psychological pressure to always be trading. So the first one, and the obvious one, is the hours linked, or the link, sorry, should I say, between hours worked and paycheck. You know, we are programmed, even from children, like the effort we put in terms of time equals the reward we get out. You know, if you work hard for your revising for your exam when you're at school or you're at college, you get a better grade. The effort you put in lessons, you get a better grade. There is a distinct correlation between effort and hours at the desk or hours doing writing and getting a better grade. Then as we go into the workplace, you know, we start off with a minimum wage job behind a bar or whatever it may be, a swimming pool, whatever. We do the hours work, we get a paycheck. We're reinforcing that link of the more time I spend doing, the more result I get. And that, for the majority of life, is true, right? If you work hard and you put the hours in and you work hard at your craft and you work up the pay scale, then you work more hours. For most people, that's how it works. For trading, that's not how it works, at least not the way we think it. Yes, actually, there is a link with effort put in, but it's the effort put into self-improvement, to analyzing prior trades, to analyzing markets, to analyzing strategies, to improvement. That's where the effort comes in and results in the reward. Unfortunately, we're linked to thinking it's the actual act of the trade that results in the reward. And so we've got this fallacy of the more trades I make, the more times I'm in a trade, the more money I'm going to make. And unfortunately, it's normally inverse. So we get double whacked. Not only do we get whacked in the face from the fact that it's not true, we get whacked in the face of the fact that it actually undoes the good stuff we've been doing. So when this is the psychological pressure we've got, you know, and also, let's say you're working, you know, convincing your spouse that trading is the way to go, your family, maybe you've quit a job, maybe you've just started out from college, whatever the case may be, and they see you sitting there doing nothing. You know, I've got a trade on, I've got a trade on. Even they don't get it. They're like, well, I've not got a trade on. You should be trading, right? And the trading makes money. And you're, well, you know, so there's always the pressure to be trading and have a trade on. But the very best position to be in is when you don't have a trade on, or you have a trade on you're comfortable with, and you're just waiting for the next opportunity that you've very finely defined out. You're not always trading. And removing that link of, okay, well, do you know what, in reality, I can probably make what I need to make with 5 trades a year, or whatever the number may be, depending on the time frame, whatever. So in reality, I'm only looking for 1 trade a month, and assuming my loss rate of X, my win rate of X, my risk reward, that will do me. I don't need to be looking for 10 trades a day. And it's far less stressful as well, guys, far less stressful. So removing that psychological link between hours worked, or at least shifting it from hours clicking the button in trading to hours studying the craft, that will then give you the result. And that will give you more weighting to not wanting to take the trade, because you know what, you put all this effort into putting out a decent trading plan and revising your strategy and revising yourself and all this kind of stuff. And then you come into the market, you won't want to just trade on a whim because you'll undo all that work. So that's number one. Anyway, long-winded way of saying that, but you get the point. Number 2, the boredom effect. Sometimes we just get bored, right? We get bored, and unfortunately, trading's there, the flashing lights of the broker, the market depth, the charts, there's news flowing in, everything's encouraging us to trade. The broker wants us to trade, the news, financial news wants us to trade, everybody wants us to trade. Social media, someone's making another great trade, this, that, the other. It's saying to us, trade, 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 trade. And sometimes we give into it, we place a trade, and that's the worst thing. We know it's the worst thing, and I've done a a video specifically on this topic, but touching on it now, the boredom effect can grab you. If you feel like you're getting bored, go and do something else. Just shut the laptop down, close off the desktop, put your risks parameters in, your stops, go and do something else completely different. Even if it's something completely unproductive and nothing to do with trading, like going to the cinema and watching a film, going to have a drink at the pub, something completely different that will stop you from taking boredom trades. Probably just do something constructive, like maybe reading a book or kind of working on the trading stuff to fire it up. But if you're just really bored, and just walk away. Just walk away, because the damage done from a boredom trade is way more than just actually taking yourself out and doing something completely different. Number 3, the need to get it back effect. You know, often we lose money, we're down, we're like, I want to get back. And you feel like the quicker you can get back to where you were, the less psychologically damaging that mistake will be, or the losing trade will be. And that's quite often why we revenge trade, we as in collective of traders, revenge trade after a losing trade or a string of losers. We want to get it back, because we want to limit the pain that we feel from the loss. And so this has encouraged us to trade as opposed to waiting and saying, you know what, I will get it back, I will be back to where I am, because I know that this is part of the deal. And so rather than rushing into substandard setups, rushing into trades that are just not valid, we're just waiting for the right one. So the pressure becomes null and void. It gets us out of there because we're waiting for a different thing without the desire to get it back. Okay, number 4, impatience. So pretty similar to boredom, but impatience similar as well actually to both of these. The need to get it back. Impatience to get to the number you want to get to. We've all got a number. We're like, okay, that is what I want my trading account to be at by this day. We've all got it, whether we write it down and we're honest about it with ourselves, or whether we're thinking it in our minds. And sometimes some people are way off the mark. They're like, they've got 500 quid in there and they think they're going to be 20 million quid by the end of the year. Some people are more measured and say, okay, I want to make 15% on it. There's a vary between, but the point is we're all impatient to get there. We want to get there quicker. And so regardless of how big or how small that goal is, we think if we just do more work on it and we trade, because it is, and it does equal the fact that winning trade does equal more growth in the account. But the point is, it's finding that winner that's the key. It's not a case of just doing that winner and doing that winner and doing that winner. It's making sure that is a winner, otherwise we're going to go backwards. So our impatience to get our account to the number we want it to be is a detriment to us, because we now really want to trade. We're chomping at the bit to trade, because we know that trading means money, means the account where it wants to be, as opposed to sitting down, waiting, reducing that psychological pressure on us. All right, number 5. The misconception of activity equals success. This is obviously, for those of you who are watching the whole video and are paying attention, very similar to 1, because this is so crucial, guys. The misconception of activity is equal to success. The very best traders are not constantly trading. They recognize that depending on whatever strategy they're trading, they recognize that they don't get the opportunities all the time. They need to trade like a sniper, like a cheater, whatever analogy you want to use. And why these analogies are flying around, because they're exactly that. It's waiting. You know, the cheater hunts, he goes for the weak, the young, the ill animal. He doesn't go for the fittest animal out there, like the big, you know, male, very strong head of the herd, because he knows he's going to get whacked, or he's going to be very hard taken down. He waits until there's a young one on the edge of the pack, you know, or a disabled one or an ill one, and he goes in, bang, and he just takes it, he drags it back into the bushes, he's done. You know, like the sniper, he's waiting for his opportunity. The wind's got to be right, the position's got to be right, the target's in the right place. He's waiting, takes the one shot, done. Now, I'm not to say that always is going to be the case as a trader. You take one shot, you're guaranteed to win, but it's putting more odds more in your favor, rather than cheater's the good analogy, just running into the pack and just trying to grab anything that's about. He's going to run out of all his resources, and if you mirror that to trading in terms of psychological resources and capital, he's going to deplete all his resources and you're going to come away with nothing, as opposed to using them in deploying them right at the right time. Bang, grab it. He might still not get the prey, but at least he's got a chance to go back and reassess, and he goes again. Eventually he'll get it. That will make up for it. He'll feed him for a week, and put that analogy into trading, as in it'll feed you for, you know, boost your account. You get the point. So this is so important, guys. The misconception of activity is equal to success. It doesn't. It's inverse, if anything. It's the activity and actually the craft of becoming a better trader, not the activity of frequently clicking the button and making the trade. Anyway, guys, psychological pressure to trade. 5 things there. Any more you've got? Always interested to hear what you guys have got to say in the comment section below. And if you like this kind of stuff, a thumbs up is appreciated so we can kind of do more videos on this. We can go down this theme, explore it further, and all become better traders as a result. Take care, whatever you're doing. Bye-bye.